The stock market's down almost 25% year to date. In this video, I'm going to talk about 3 things that you can do to get rich from the stock market crash. The first thing that you can do is to extend your time horizon. Don't invest any money that you might need for a minimum of at least 3 years and plan to invest for a lot longer than that. Remember, I can't give you financial advice. I'm not a financial advisor. Make your own decisions. This is a chart of the stock market and all of the bad things that have happened since 1870 from my friend Brian Feroldi. Since 1870, we've had depressions and railroad strikes, World War I and the Great Influenza, the 1929 crash and Great Depression and World War II, post-war bear market, the height of the Cold War, inflation, Vietnam and Watergate, inflationary bear market, Black Monday, the lost decade. And over that entire time, $1 invested from 1870 just held to 2020 would have turned into $19,000. And what you can see here is there are periods of negative returns in the stock market. There are periods of stock market crashes, right? Everything you see here that's highlighted in red is a market crash episode, and then it doesn't get back to its previous highs until, the blue line ends. And so the lesson there is if you can extend your time horizon and not use things like margin, not invest money that you need in the next 3 years, your statistic probability of making money in the stock market goes up the longer that you can be invested. So that's rule number 1 to getting rich in the next stock market crash is realize that these crashes happen. They're impossible to avoid and they're opportunities for long-term investors. So right now everybody's talking like we're in a stock market crash or the stock market's coming, the crash is coming, it's going to get worse. This is the fear and greed index. It just measures 7 different indicators to see if we're kind of in a greedy time or a fearful time. Warren Buffett says, be greedy when others are fearful and fearful when others are greedy, right? It doesn't work perfectly every single time. But the note here is that we are not in a time of extreme greed or excess, at least not right now, according to these indicators. We are in a time of fear. Last week, or even the previous close, it was extreme fear. 1 week ago, we were extreme fear, and we've been in fear for a year or a month at least, right? So it's not a perfect indicator, but at least what we see is that we're not in extreme greed, so that, something like a crazy, 1999 peak high is where we're currently at, or 2006 peak high. Maybe we were there at the beginning of 2021 or whatever, but the market has come down a lot. Tip number 2 to get rich during the stock market crash is to invest every month or twice a month or whatever. Set a cadence and keep investing at that cadence. Don't adjust it based off being scared of what's going to happen in the next week to the stock market. I've built a scenario right here, just investing in the S&P 500. So this would literally take 0 time from somebody. You'd have to set it up and then set your monthly contributions from 2002 to 2022. Just because that's a 20-year time frame, and that's if somebody is starting at 30 and investing till 50. But really, we're probably investing longer than that, right? Till 60 or even after that. So we might even add years onto this. But the point is, it's a 20-year time horizon. Started with an initial investment of $1,000, and then every month I did it kind of based off of 10% of an $80,000 a year income. And so that comes out to be $666 a month. What this chart shows is what the value would be, what it would grow to from 2002 to 2022. It has grown to a total value of $483,664, and contributions have been $161,500. So you've made about $320,000 over that 20-year time period from dollar cost averaging. This is putting money in every single month for 20 years, not being afraid of market ups and downs. And what I want to show you is that your time frame matters. Back to what I talked about, a 3-year at least time horizon, but the more the better, right? Where this purple line dips below the blue line is where the account value is actually less than they contributed, right? Some people might find themselves in this position right now, right? So heading into 08, they had contributed $47,600 according to this, process. It would have been worth $53,000. Well, once that great financial crisis hit, it got to where somebody had contributed $52,000 and it was only worth $37,000. And so it took, as long as you kept contributing, it came back positive by January 29th, 2010, where it was worth $61,600 and they had put in $59,600. And then look, it never got back under the amount contributed, right? That is what the value of time in the market does. You'll see people out there claiming they can time tops and bottoms and stuff like that. It's impossible, especially if you want to go work a job and not stare at the market all day. Most day traders lose money. Most professional investors trail the S&P 500. The best thing that you and I as individuals can do is have a process that we can keep investing every single month, and then go focus on life and living your life, enjoying your job, enjoying your family, and making more money over time, which is what truly will make you a millionaire. Make more money over time, whether that's a side hustle, a business, earning more, getting more skills, earning more money, cutting your expenses so you can invest more. And that brings me to the third and final point. The key to getting rich is to increase your wealth over time. Gain new skills, find new jobs, start a side hustle, whatever it is, and increase your income over time. And don't let your living expenses increase as much as your income. And then if you can increase your income and go from a 10% savings rate to 12%, 13, 14, 15% of more income, that is how you take advantage of bear markets, keep investing, invest more over time, and get rich in stocks. Anybody that tells you you could do it in a short period of time or with stock picks that are going to go up 100% or 200% over a short period of time is lying, trying to sell you something, or has no idea what they're talking about. That is the reality of getting rich during bear markets. It's by sticking to the process, investing, knowing you can't time it, not taking too much risk and using margin and having too short of a time horizon, and increasing your income over time and understanding that this happens in the stock market. With all that being said, on this channel, I primarily invest in individual stocks, and I'm sharing that entire process. So I'm just going to do a quick portfolio check-in. We're at $101,995 in the portfolio. We're up $6,700 today. Full disclosure, we're still down $16,800 since February 15th. So it's been volatile and we're still down. I update this all the time. So just do me a favor, like the video and subscribe to the channel if you want to see these updates. Here's the stocks I own. I talk about them all the time, and I'll cover which stocks are up the most this week. So just make sure you check the videos. And I posted a video. I lost $25,000 over the last month in the stock market. And this is why I feel good about where we're at. And I think you can kind of tell based off social media, right? And people's responses. Although it's not a perfect indicator, right? Like the amount of money that's being invested is far beyond what people on YouTube are commenting. But we had one comment that said, "Be prepared, much bigger losses are coming. We have not seen the lows." Black Circle said everything's down. He's down 9K. Thanks for sharing. Yankee Doodle says he's down 500, or she is down 550K into chill. Who knows if we believe him or not. Sounds like this person's just trying to like one up somebody else and make me feel bad about myself because my portfolio is not as large as theirs. So congratulations, Yankee Doodle, on your massive portfolio. Gordon's not happy with me. What did I expect when I go to a casino? Don't expect to walk away with more than I went in with. Okay, I don't think investing in the stock market and having a reason in owning businesses is a casino. It's not the same, but that's their opinion. Jack said, "So I sold. You still don't lose until you sell or stocks go down or file bankruptcy." I get the point there. You actually do lose if you don't sell, because the value of your stocks has to increase that much more to reach high. So that's kind of a fake fallacy. You don't lock in losses, but you still have to make up everything that the stock's lost to get back to even. Sell while you can. Don't be a bag holder. Thanks, William. What portfolio tracker? I use M1 Finance. The growth stock era is dead. My portfolio will be less than $10,000 in the next few years if I don't change. Lots of companies in my portfolio are not profitable. They can go to zero in a recession. So again, when times are crazy, everybody's in here commenting how great things are and how smart I am and blah, blah, blah. Again, this is not an indication of the whole market, but it does give a little bit of sentiment, right? All of those negative comments, people are saying growth stock investing is done. So this is just a show. I don't think we're at like a crazy excess, but it is interesting, right? I mean, say I would have taken that and sold out at, whatever, at the end of the day on Friday or this morning, 9,500 and 600 or 95,600 was what we were at. And then again, this morning we're at 102,100. So, that's exactly why I don't time the market. I'm in this for the long term.